then you're only going to make 1%. And I use only loosely because that's excellent in 1 week. It's making 1%. But if you have to adjust this trade, then that's where you're going to potentially be able to make 2 or 3% in that week. In this video, we're going to discuss the 7 DTE strategy. We're going to discuss how amazing this strategy is and how it can be used even if you have a full-time job and you cannot trade the SPX during the day. You can only trade at night. This is the premise of this video, that you can only trade at night because you literally are too busy during the regular market session because of your job or whatever the case may be. In this video, we're going to break down how you can use the ES. The ES is the S&P 500 futures contract. You can use the ES options to trade at night to make just as much, if not more, than trading the SPX. And you get a tax benefit called the 1256 contract treatment. It was established in the 70s for futures contracts and futures options, and it was translated into the European style indexes like the SPX, the NDX, the RUT, things like that are cash settled. You get that 1256 contract treatment, which means that 60% is taxed at long-term capital gains rate and 40% is at short-term capital gains rate, which is basically your ordinary tax rate. So the ES is an excellent vehicle to use to be able to trade the markets, and you are trading the S&P 500, the broad market. Most professionals look at the ES to determine what the market is doing because it's trading almost 24 hours per day, 5 days a week, from Sunday night to Friday afternoon. So the ES is the leading indicator of what the market is doing, and it can be traded at night between, once again, Sunday and Friday. You can't technically trade it at night, but you can trade it from Sunday to Friday. But if you're going to trade it because you have a full-time job and you can only trade at night, then it's some criteria you need to follow. So first of all, when you're doing the 7 DTE trade, you have to figure out when or what is happening during that last expiration date, because you cannot go to a 0 DTE expiration situation when you can only trade at night. So you're going to have to be out of the trade within 6 days, or you're going to have to do an 8-day or 8 DTE type of strategy and out of it within 7 days. You cannot take it to the 0 DTE because then that's trading during the day, and you're not going to be able to do that due to your schedule. That's the premise, once again, of this video. So what we're going to break down is some additional criteria that you need to be successful with this trade. So the first thing is that we're going to choose this 8 days to expiration in this example. Right? We don't have a 7-day expiration because we're doing this video, which is live on a Sunday night. So you could trade on a Sunday night to initiate this type of trade. And you can see here on your screen that it's 8 days to expiration, expiring on December the 4th. So first thing you want to do is check to make sure you're doing something that's 7 or 8 days to expiration. And you're going to be out of it. I can't stress enough. You're going to be out of it before it becomes a 0 DTE trade. So you have to exit it when it's a 1 DTE trade. After you determine the expiration date, 7 or 8, then you're going to make sure that you're allocating 5K for every one contract that you're going to use. Because if you're using one contract and you're allocating 5K, you're going to initiate this trade using a 20-point wide spread, and you're going to collect at least $100 off that one contract. And if you get out of it at 50% or 50% after fees and commissions, which you will collect at least $50, that will give you 1% on your 5K. You're trying to make 1% to 2% weekly on this trade. So initially, if everything goes correctly and you only collected $100 after fees and commissions and you get out of it with 50% or $50 after fees and commissions, then you're only going to make 1%. And I use only loosely because that's excellent and 1 week is making 1%. But if you have to adjust this trade, then that's where you're going to potentially be able to make 2 or 3% in that week. I know for myself, I've been trading this for 6 months straight and haven't lost, and been trading it every single week for 6 months straight and haven't lost. In some weeks, I have averaged over 3%. Actually, the last 3 weeks have been 3+% weeks for this type of trade. So you can make more than 2%, but the goal here at the Dorian Trader is to teach you how to make 1 to 2% consistently with this trade. So once you set it up and have your 5K, right? You set it up and you have your 5K, and you're going to allocate that to one contract. So if you want to do more contracts, you're going to have another 5K for 2 contracts, 15K for 3 contracts, 20K for 4 contracts, and so on, right? Every 5K equals 1 contract. If you have 9K, you have $9,000, then you can only do 1 contract. You do not want to get too big with this trade. You want to have enough wiggle room, enough ammunition to be able to successfully trade this on a consistent basis and be able to adjust it and make money week after week after week. You're going to have to adjust this trade 40 to 50% of the time. 40 to 50% of the time, you're going to have to adjust this trade, so you have to be prepared. So it's 4 things you're going to have to know how to do, and you have to know how to do it at a very high level so you can also win month after month after month. You can go on a 6+ month streak of doing this weekly and not losing, like the streak I'm on right this second as we do this video. The first thing you want to know how to do is put on the trade. How do you successfully put on the trade, set up the trade? Number 2, you want to understand how to read the trade. What's going on with the trade? Is it going well? Is it going poorly? Does something have to happen? And if it does, number 3, you're going to have to know how to adjust the trade, and you have to be able to adjust it on a super high level, because once again, you're going to have to adjust these trades 40 to 50% of the time. And then number 4, you're going to need to know how to take the trade off. Do you take it off as an iron condor? Do you take it off at 50%, 60%, 70%? Do you wait to expiration? Do you take off just the call side or just the put side? Do you take off just the short legs? How do you take this trade off? Do you use stop losses? You need to know all of those things to be successful at this trade in regards to taking it off. And we teach you that at the Dorian Trader. We teach you a significant amount about this trade so you can be successful week after week after week. And if you have a problem, you can contact us and we can jump on a call to help you. Every member of our trading club gets 911 help. So you're not alone. You learn the process. We have so much information, and we trade this on a weekly basis and discuss it several times a week in our trading club. You will be able to learn how to do this trade at a super high level if that is your desire and you put in the time. And you can make 1 to 2% week after week after week. But you have to be committed. So let's go over the steps of setting up this trade so you can kind of understand it when you're trading this at night, when you're trying to make 1 to 2% week after week. All right, so the first thing you're going to do with this 7DT trade, using the ES options on futures. So if you don't have a broker that allows you to trade the ES options on futures, then you have to get one. We recommend TastyTrade first of all, and then we also recommend Thinkorswim, right? That's owned by Charles Schwab at this point, previously TD Ameritrade. But this is the TastyTrade platform that we're demonstrating on during this video, and the founders of TastyTrade were the founders of Thinkorswim before they were purchased by TD Ameritrade, and then obviously TD Ameritrade was recently purchased by Charles Schwab. So you need to be able to have access once again with the ES, and then what you're going to do is start off by looking at the straddle price. Right? You're going to look at the straddle price. The straddle price right here is saying 48, and then you're going to match that against the TastyTrade platform expected move. So there's a saying 44. So we're going to round this up. So that would say 45. In this case, we don't need to round it up. Normally we round it up to 49. In this case, we're going to say it's 48. And what we're going to do is double that. We're going to times this 48 because we're going to use the bigger number than the TastyTrade platform. We do use the TastyTrade platform once we put on the trade. Okay? But to initiate the trade, we're trying to use the bigger number. So in this example, it's 48. It's 48. So we're going to times it by 2, and then we're going to add it to this last price here, and then we're going to subtract it to that last price to be able to get our short legs of the spread of the iron condor. We're putting on a put spread and a call spread simultaneously, right? And then we're trying to go no higher than a 10 delta. So what we're going to do is add this number up. We're going to take the 45, 47, and we're going to add it to the 48 times 2, which is 96. So the 45, 47 plus 96 is 46.53. So that's going to be where we're going to put our call side short leg, the 46.53. So it should basically be the 46.50 here. And we're going to do a 20-point wide. So that's going to be a 20-point wide there. And then we're going to do the same thing to the put side. We're going to take this number here and we're going to subtract 96 from it. So 45.56 minus 96 is going to take us to 44.60. So then we're going to put our put strike there at the 44.60 and we're going to do 20 points wide, and that would be here. So in this example here, we're at the 9 delta on the put side, and we are at the 5 delta on the call side. We're trying to go no higher than a 10 delta and no wider than 20 points wide. So we're already at a 9 delta on the put side, and we're only collecting $78. We want to collect at least $100 after fees and commissions. So what we're going to do is move this up a little bit here and keep it 20 points wide. So that's giving us 93. That's still not enough. We're going to bring up the call side to the 10 delta. That's going to be 115. And so if we hit review here, that's going to give us the 106. That's going to give us the 106 over $1,000 basically. So this will meet our criteria. If we wanted to collect a little bit more, we could bring that put side, or actually we wouldn't because we're going to be dogmatic about the deltas. The next delta is 11, so we're going to keep it at the 9 delta. So this will be the trade here that we would initiate. And we will send this, and once we're filled, what we teach members to do is put in a closing order, put in alerts, and then manage the trade based on delta levels. We'll teach you all of that if you decide to join the Dorian Trader. If you decide to join our trading club, we'll walk you through these process, help you if you need some assistance, and make sure that you are winning week after week after week. You just have to reach out and have the desire and the discipline to be able to do this trade. We'll teach you every little step that is required. So this is once you put the trade on, and then you just let it play out and you manage it the way the steps that we teach you with, and then you can make 1 to 2%, sometimes more, as I indicated earlier, per week. So this is what we wanted to discuss in this video. If you have any questions, please leave some comments in the comment area. We answer all comments. And if you enjoyed this video, please like and subscribe. We would super appreciate your support. With that said, we'll see you next time. Bye for now.